You are listening to chartingwealth.com's daily review for Friday, the 12th of October, 2018. I am coming back from Europe. Been up since 10 p.m. East Coast time, the equivalent, flying all day. But we are here at the close of the market to bring you what's been going on Thursday and what we're looking at going into Friday. Don't forget, at the end of Friday, we will be recording for you over the weekend the comprehensive review and forecast, and fully expect we're going to see a weekly vertical crossover going down on our first chart, and that of course is the S&P 500. And we look at the weekly chart always. Of course, it is blown through, really passed through on the prior week ending Friday the 5th of October. It pushed through that old weekly trend line, and we have one heck of a down candle with a huge wick on the bottom. Price percent oscillator spiking down. Derivative oscillator tearing down as one would expect. What's going on that 2-day chart? Same kind of thing. We have basically 6 days now of down movement. The last two super strong. Looks like the wick's about as long as the down candle in our Heikin-Ashi candlesticks. And of course we had that 2-day crossover all the way back on the 7th of September. And it's taken that long for there to be enough movement to pull over the S&P 500. So we continue to watch that. What do we see on the 4-hour chart? We get looking close. We see over the last 2 days just strong hammering down movement. Derivative oscillator, price percent oscillator dropping off the map there. So we'll be watching for that. Those of you sign up for our text service, instructions are in the show notes. If you'd like to get a text, you have to be in the States, but anybody is going to know, because we're going to announce all the weekly vertical crossovers as we always do in that comprehensive review and forecast over the weekend. S&P 500 down more today than the Qs. That's the NASDAQ 100. S&P 500 down 2.17%. Let's go on now to QQQ. That's the NASDAQ 100. It, of course, has hammered down over the last week also. Price percent oscillator dropped off the map. Derivative oscillator hammering down. Remember, we had a weekly vertical crossover back on the week ending September the 21st. And then the market really went sideways and started really hammering down over the course of this week. We look at that 2-day chart, and for the last 6 days, lots of strong down movement. Price percent oscillator, derivative oscillator gaining momentum going down. And the 4-hour chart shows us where our jumping in point was. Of course, we had that crossover going down Thursday morning, the 4th, and the jumping in point there that afternoon and things. But for the 9th, both in the morning and the afternoon, that was Tuesday, where we had a little bit of sideways slide and a little bit of up movement. It has just been hammering down since then. And of course, those of you who have been doing your practice trades, like we urge everyone to do, have seen some incredible results from that. Down, about what? $14? Something along those lines. So again, QQQ, if you've not listened to our training, we'll put at the end of this one on inverse funds, how to make money when markets crash. Tells you all about what the inverse funds are, particularly when dealing with the Qs and the S&P 500, understanding how those work. And of course, those who understand options trading, of course, puts can be in order for you to practice with. And again, we're not a stock calling service. We're not giving you advice to jump into this. We want you to practice with us, learn from us and books and everything else. And then when you get good enough, you can make up your own mind when and if you're ever going to get into the market. But we had a great turn. Okay, let's look at what's happening with bonds. Now, remember, we had a weekly vertical crossover going down in bonds back on the week ending the 14th of September, and we are going into our 4th week of down movement, although bonds up for the day quite strongly, 1.21%. Now, we see that the price percent oscillators continue to gain downward momentum, not as much as it had been in the prior week, but still moving down, and the derivative oscillators gaining downward momentum. We go from the weekly to the 2-day chart. What do we see there? This was what we were talking about yesterday. We had strong down movement, but things started petering out. Derivative oscillator, what we've seen happen now on our 2-day chart is a green spinning top. Now, what's the market doing? Well, it did about the same thing back on the 2-day candle on the 27th, and that was 27th of September, and just caught its breath and then dropped over. Don't know that it's doing that or not. Remember, bonds tend to move inversely to stocks, so that could be what's happening. Money's fleeing from stocks into bonds, but again, we'll let the charts lead us. Derivative oscillator losing downward momentum, price percent oscillator not just flat, but heading up, but not yet anywhere near crossing. We go to that 4-hour chart to really check in, and of course what we saw over the last few days with things bottoming out around the 112.77 mark, and then crossed over going up in the morning on Thursday, and then further up in the afternoon. So again, that would have pulled you out if you had jumped in back on the 3rd after that morning flip over in the price percent oscillator on that 4-hour chart for your jumping in point. So again, still in good stead, but let's not lose that. So again, that's the magic of the weekly vertical crossover. So we're going to go back to the weekly chart, and we're going to take a look at gold. What have we've been waiting for, my friends? We've been waiting for this weekly vertical crossover. We've been talking about it for weeks. Is gold bottoming out, and is it going to go up? Well, looks like unless gold really bottoms out on Friday, we're going to have another weekly vertical crossover. This one up versus the S&P down. In fact, it's beautiful. I have been waiting to practice trade on gold. On this, gold up for the day 2.52%. Now, derivative oscillator heading up, price percent oscillator heading up. Let's go to the 2-day chart. What do we see? We see that 2-day chart spiking up, and that is on the derivative oscillator, price percent oscillator spiking up also. We have a green up candle, biggest that we've seen in quite a while, and that is nice. And of course, let's go from the 2-day chart to the 4-hour chart and see what we see there. Of course, that 4-hour chart has rotated over, heading up quite nicely, and that again is beautiful after things spiking off and heading down. So it's beautiful to see all of those things occur. And again, forgive me, again, I'm suffering from lack of sleep. We had that weekly vertical crossover occur, forgive me, this last week. It's just really kicked into high gear this week. And with that said, folks, I'm going to end this broadcast, get this uploaded to you. And since I've been up going on about 19 hours, I'm going to get a little bit of sleep. God bless, my friends. All the best from the whole team at Charting Wealth.